Folks, I know you are waiting with bated breath. Mr. Dan Bird is back. He was obviously on a road trip, family trip, which is awesome. He said his niece's wedding was amazing, so good for him. But you are back in the hot seat. The market has
I'm
been
back.
wild.
I'm back in Florida, and the wedding was in the mountains of Virginia, and it was cold and windy.
Very different than Florida.
Very different. Yeah, it's so good to be back in the warmth.
Yeah, yeah. So the market's been kind of wild the last couple of weeks. It's also, in my opinion, very uneducated or unexperienced, kind of anchored around 4,000. It seems to be like a magnet, just between 4,000 and 4,100, something like that.
Yeah, it's at a very important, critical point right now. I'll show it to you in a second. Which I've talked about before. I said that this is where we needed to get to, and I talked about the 38% Fibonacci level, which we bounced off of, and we're zooming higher.
Hmm.
Nobody believes it though.
No, yeah, I certainly don't. Certainly tech's on, the risk on trade's going. I do think it's kind of skewed towards big tech. Like if you take out, I read a stat, I don't know if it's true or I don't know if it changed on Friday. If you take out the 11 big tech names of the S&P 500, the other 489 stocks are net down. But the 11 big tech names are, have it skewed higher. So kind of wild.
So what?
Well, I
The
think
market's still up.
it is, but you're building on, in that example, 11 legs that may not all be strong.
No, that's true, and it implies that you have to pick the right stocks, or just pick an index and stick with the index.
Yeah, it's pretty wild. So I know you have a lot of data to show us. Obviously, I don't know, something that happened while you were gone is I think we are going to have the recession's going to come earlier. Because
Really?
of the banking, yeah, because of the banking crisis. I'm seeing consumer behavior change almost overnight, and that data won't show up for another 4 to 6 weeks. But
Right.
I think a scared consumer can cause a recession all by itself.
Oh yeah, no
So I think,
question.
yeah, I think a recession in,
70% of GDP is consumer. So
yeah, 68, 70. I think when the Economic Bureau calls the recession in 9 months, they will say it started April of 2023. I don't rarely make big changes in my calls, but I made that one. I think a recession starts now.
okay, so yesterday.
Yep, correct.
All right, that may not be out of the question. Let me talk about a few things, and we'll weave that into it.
Sure.
I'll share my screen here. For those that are interested, if you want to join my newsletter,
So we're not seeing. Oh, there you go. There you go. Sorry.
There you go. I put out every Saturday. Just send me an email to breakpointtrading@gmail.com, and I'll add you to the list. I'll send you last week's. And if you ever want to be taken off, just let me know, and I'd be happy to take you off. We're going to talk about this chart in a second.
Okay.
Just for a sense of what April looks like historically, going back to 1950. So 73 years.
So generally a good month.
Generally a good month, and it's usually a good month for tech as well. The dotted lines are pre-election, which is what we're in this year.
Okay.
So that's kind of differentiates from all other years in the sense that it's the year before the election.
That is interesting. All the dotted lines are higher than the solid lines.
Yes. Yes, and the reason, it should be intuitively obvious, but the government and the current administration in particular wants the economy to perform well going into an election.
Shocking. Say it ain't so,
Yeah.
Dan.
So they'll try to do whatever they can to make that happen.
Yeah, makes sense.
Which is fine.
Mm-hmm.
Non-farm payrolls is this Friday, which also is a holiday for the market, which is interesting.
Oh, it is. Oh, yeah, Good Friday.
It's Good Friday on Friday. Actually,
That's
I guess
interesting.
I should move this right in the middle, right there. Yeah, it's Good Friday, and payrolls are still going to come out though. The market won't be open.
Okay.
So it'll be Monday that we'll see the reaction to it. And then CPI report. Well, I'll talk about that.
Question, Dan. One thing you put in your newsletters, and forgive me, I have not looked this week, but you usually put in expectations. Do you know what Friday's job number expectation is? And if you don't, it's okay.
I do. Actually, I have. That's the first thing I'm going to show. In
Okay,
fact,
I'm sorry.
After this, which is the calendar for last weekend. For next, there's some interesting things from last week too that we should talk about. So CPI comes out on the 12th. Options expire on the 21st. The Fed does not have a meeting this month.
Nope.
So the Fed meeting is the 2nd and 3rd of May.
Correct.
So they're going to have lots of data going into that meeting. And I wouldn't be surprised if they stop. If they don't raise another time, especially if you said the recession's starting. So.
Yeah, I still think they're going to give us one more. I think it was Powell's intention always to go one farther than most people expect.
And we'll see.
Yeah.
I always said by April there'll be talk of recession, and that will cause the Fed to pause. So we'll see if that happens.
We'll see.
Let me go here, and this is the calendar for last week. So interesting, a couple of interesting things. Pending home sales. I'm sure you talked about that.
We did.
Actually went up.
It did.
From the forecast. Crude oil went down dramatically.
Interesting.
GDP went down slightly. Initial job claims went up slightly more than forecast. And core PCE went down slightly more than forecast. Now, all of those things, even though they're red, all of those things are the things that the Fed wants to see.
Correct.
All right. So those are good things for the Fed. So here's next week. So the forecast is 238,000. Last one was 311. I think the forecast last time was 215 or something.
I think you're right.
And we got 311. So this time it's 238.
I'll take the over. And again, this is the weird thing is I don't think it matters.
No,
I think a lot of the numbers we got were pre-banking crisis. And
yeah, that's true. But have the banks really laid off that many people?
No.
Or has anyone laid off? Has anyone laid off people?
That's kind of my point is these numbers are pre-crisis, and what will happen post this is a lot of zombie companies won't be able to raise, their burn rate will take them out. We just saw Virgin Orbit be kind of the first SPAC to go bust because they couldn't raise $200 million and they had to lay off everybody. This is going to be death by 1,000 cuts.
Just to be clear on that one.
Sure.
It's also because their launch failed.
It didn't. They didn't get the proof of concept or validation, of validation or whatever.
Right. Their launch failed. I don't know if you've ever listened to Elon Musk, how close he was to going bust.
Oh yeah.
With SpaceX, he was one launch failure away from going bust.
Yep.
And fortunately, that last one actually succeeded, or he would have been out of business too.
Yep.
So I wouldn't necessarily put a lot into that particular one. I mean, there may be other things that happen, but I don't think that one alone says very much.
Agreed. All I'm trying to say is the lending environment is very different than it was 2 years ago. And the people, the LPs or limited partners or VCs, whatever these people are, they're going to take a harder look at companies. And
that's absolutely true. I mean,
many won't get funded.
Yeah, that's what the rate hikes were supposed to do. That's what it's all about.
Exactly. Yes.
Yeah. No, I don't disagree. And I think that there will be a recession. I'm not convinced that it's this month. But I think all the narrative will be around recession.
You know what? This is really funny. I actually think the talk is good. This is just how broken CNBC and the talking heads are. I think most of the talk for the next month is going to be how strong Q1 was. Because again, January and February were, by all accounts, stronger than expected. What people don't realize is the world changed March 15th or March 16th, whenever that Saturday was, post SVB. When you have mom and dad going to the bank account and taking out their last $8,000 and keeping it at home because they're afraid of the banks,
right?
That's not good. And that has happened.
Yeah, we talked the last time I was on a couple of weeks ago, we talked about the fractional reserve banking system and
Exactly.
how fragile it is to that particular issue.
Exactly.
So we'll see. We'll see what happens. I mean, it could be really bad if everybody wants their money out.
Yeah, we've seen, again, I talk about on my daily show. We have a daily financial news show live at 7:30. Last week, I think we talked about 120 billion leaving the small banks, 60% of that going to the big banks, but the other 40% going elsewhere. This week, the big number is 110 billion left the big banks. I think it was 80% of it went to money market funds. All of this hurts fractional reserve lending. All of it.
Yeah. Yeah, money market funds are also vulnerable as
They
well.
are. Yeah. Remember in the Great Crisis, they broke the buck was all over the news.
Yeah, I mean, money market funds are not necessarily covered by the FDIC.
Nope.
Be better to put it in a CD. 12-month CD is paying 4.25%. So why not just move it there?
There you go.
That is insured by the FDIC.
Mm-hmm.
So we'll see. We'll see how
Yeah,
it works
it's
out.
going to be interesting. And again, I don't change my opinion very often. Hence, I've held the 5% terminal rate for a year now, and won't
Mhm.
change it. But I do think when you are so scared, you take your money out of the bank, you are not going to go out to dinner. You're not going to buy a vacation. You're not going to buy new clothes. You're just going to sit on your hands and do nothing. And in a consumer-based economy, that's not good. That's not
Yeah,
good.
I agree. But I don't think it's going to affect the stock market in the short term.
I
And I'll show you why. I'll show you why in a minute. But
I think
so
I said the exact same thing. I don't think it affects the stock market in the short
right.
term. The short term being Q2, because again, I think the talk track is going to be January and February were good. Look, the
Yeah.
consumer is still strong. La 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 la. It's just crazy, crazy, crazy.
Yeah. Next 6 weeks, I think, is actually going to be pretty good.
Okay,
Anyway, the JOLTS number may be important. That one's forecast to go down slightly.
it will be.
Um, and oil is really interesting. Yeah, I'll show you that in a second too.
Okay.
All right, so let's take a look at, first off, let's look at the sectors.
Mm-hmm.
So here's the sectors. This is for 1 month. And focus on the S&P, which is that one right there.
Mm-hmm.
Everything above it is outperforming. Everything below it is underperforming. So technology, communications, the two aggressive sectors, and then discretionary is the other aggressive sector that's slightly underperforming. But for the last month, they've been doing pretty well. For the last week, look at that, energy back on top.
Interesting. I
Now,
would not have guessed that.
discretionary has moved up and technology and communications have moved down. So
Interesting.
there's rotation going on here in the last week.
I would not have seen this. This is great. But the audience should realize again what you gave him here. That's eye opening.
Yeah. Yeah. It's interesting. If you look at just the close on Friday, now you've actually got communications, which is the internet group, back on top, and discretionary and technology is very close to it. And energy now at the bottom. That's just one day. Even though energy outperformed for the week, it underperformed for the day. So I'm not sure one day can really tell you much.
Okay.
But if we take that and look at the, let's see here, relative rotation graph.
I love this graph.
If you
This is
like,
so
you
much.
like the last time we showed this.
I do like this.
All right, so that's the rotation of the sectors. These are weekly. So these trails here, each dot is 1 week. And right now we're, as of today, so you can see technology, communications in the leading quadrant, and discretionary right here is moving from improving towards leading.
Hmm.
But let's move it back to January. Here's February. So here's the beginning of the year right here. And let's just watch how it's rotated. All right, so now you've got industrials, materials, financials, all those at the top.
Mm-hmm.
So as we move forward, January
Look at
23rd,
that.
this is 1 week at a time. You can see all those sectors that started off good are now in the weakening,
Yeah.
and the other ones are moving up. So here's the February 21st. Communications is now in the leading sector, leading quadrant.
Mm-hmm.
Technology is now in the leading quadrant, February 27th. And discretionary is quickly moving up.
That's a
All right.
great view.
So those are all aggressive sectors that are moving over here into leading. And the way to look at this is the vertical axis is relative strength or momentum. So if it's higher up, so you can see communications and technology are pretty high up, then they have a lot of momentum. And the x-axis across the bottom is relative strength. How strong is the move? So the further to the right it is, the stronger the move that it is. So again, technology and communications are the two strongest sectors, and discretionary is right behind it. And those are the three aggressive sectors. This is all leading to my narrative.
Mm-hmm.
Let me bring this back down a little bit. So I had this one in my newsletter. Actually, I think I put it last week too. But anyway, I did a very brief newsletter last week.
Mm-hmm.
This one here is a longer view of the S&P going back all the way back 3 years back to 2020. In fact, you can see all the way down here in the far left-hand corner, that's the bottom of the COVID crash over here.
Okay, got it.
So the thing to look at, a couple of things on here. First off, the 38.2% Fibonacci, that's the orange line right here that I've talked about. We came right down to it 3 weeks ago, and I said we needed to stay above that, and we did. Not only did we bounce, but we've had 3 very strong weeks.
Mm-hmm.
And last week in particular took us all the way to 4,100.
Yep.
See that right there?
Mm-hmm.
All right. So it's a little bit better. All right. So then we've got the 23.6 Fibonacci at 4198, 4,200, let's call it. Mm-hmm. That's this orange one. We have the 75% quadrant line, which is right below 4,200. We've got 4,100, which is where we are right now. We actually just broke through it on Friday. All of this is a lot of congestion.
Right.
This is like trying to get downtown San Francisco during rush hour.
Right.
Think of it that way. A lot of congestion in here. Or another way to think of it, and this is the way you should think about technical analysis anyway, is all these people back here that bought just waiting to get back to break even so they can sell.
Right.
All these people back here that bought are just waiting to get back to break even so they can sell. So when we need confirmation that last week's run, that candle is going to hold. I don't expect it just to continue going up. Markets just don't do that. So I do expect it to come back down at some point. I don't know if that'll be Monday or next week or when it will be. But I do think there's enough strength in all the things that I just showed you. I showed you the aggressive sectors moving towards the top in the last one. This right here, we've successfully negotiated a very important support level down here. I think we've gotten above the 200-day moving average, which is this gray line. We haven't been able to do that for a year. All of these things are saying to me that the market is very strong right now, that the big traders are rotating into aggressive sectors, technology, internet, things like that. It goes along with your narrative that earnings are actually going to be pretty good.
Yeah, I think they're going to be pretty good and be a mirage. But yes, I think they're going to be
so earnings starts in a couple of weeks and goes right through April and into May.
Oh yeah, it goes through the Fed meeting.
Yep, through the Fed meeting. That's right. So I think even though we might go sideways a little bit here as some of these traders back here and back here take profits, we may go up and still go sideways. I think eventually we're going to break through the 4,300 level, which is a really important level. And we may actually make it up here to the 4,500 level, roughly. That's this next resistance level up here. Now, once we get
I just want to say, again, this is why you're here. This is why you're teaching me stuff. But I look at all of this in what I see going on, and I laugh. But again, the market, But I think getting to 4,500 is comical. But I can see what you see.
As I always say, you have to separate the fundamentals you have to separate the economy from the market.
Absolutely. That's why I'm a horrible trader.
Yeah. So here's one way to think about it. If you're waiting for all the fundamentals to be perfect, if you're waiting to get through the recession, if you're waiting for the banking crisis to be over, if you're waiting for all of that to happen, then you will have missed the run.
Totally agree. Agree.
The way to be a successful trader, and this may be somewhat true in real estate as well, but you have to be willing to make an investment without having all of the information.
I totally agree.
So we are right now beginning a very bullish run.
Okay.
We may, get stopped a little bit in through this orange section through here, or we might go sideways some. But if we break out of 4,300, then I think we're going to 45. Now that's the point at which the market is going to have to make a decision. Does it want to continue higher at that point? Now, at that point, we probably will be through the next 6 weeks. So I see the next 6 weeks. I think we're going to go higher up into this area in the next 6 weeks, no matter what the fundamentals are, no matter what talk about recession there is, no matter what the banking crisis does. I think we're going higher no matter what.
Okay.
But once we get up here, then we'll have to see what happens.
Yeah, I think eventually the economy will trump this. But you're right. The next 6 weeks is going to be absent. We will not get much data other than some flash reports from credit card companies about true consumer changes for 6 weeks. You're absolutely right. Yeah. And by the way, the market still believes the Fed's going to pivot. The Fed's going to cut all of this, which means risk on. And I get it. The next 6 weeks, absent of data, the market will do what the market does. I just do not see a very good second half.
Yeah, and that might be true. We'll see how it plays out.
Of course. We'll come back every week and make fun of each other.
We'll talk about it some more. And the idea here is, I'm basically a trend trader. Yeah. So I want to identify trends when they're first starting and get in the market then. But you also want to be aware that trends reverse too.
Sure.
So be ready to, change positions when that happens.
Yep. You are a trader. I'm an investor. I don't trade. I get into things that I plan to hold for a long time. I do use tranches. I do use stop losses, things that you've taught me, which I never did before. But yeah, I will never be a trader. That's for sure.
Right. Yeah, and that's fine. That it takes all kinds, naturally. This is a closer in view of the S&P.
Wow, look at that.
So here's that 38.2 Fibonacci that I've been talking about for so long.
You have.
We bounced right off of it and headed higher.
Yeah, last week. Woo.
Yep. Made it through that resistance. The next resistance is at 4,200.
Okay.
So we'll see what I don't know what's going to happen next week, but Friday was a really strong day. You can see from that candle, there is no wick on that candle.
It means we closed at the high, yeah.
It means we opened, we never went down.
Right.
We went higher all day long. Yeah. And the only reason it didn't go any higher was because the market closed.
Yep.
So we could see more buying on Monday, could go even more. There's still room to move on the RSI up here. Look at the accumulation distribution.
Yeah, I saw that. Yeah.
People are accumulating like crazy. I'm actually going to show you something here in a second. And here's the VIX.
Yeah, it rolled over. Yep.
Remember last time we talked a couple of weeks ago, the VIX was up here in the red area and looking like the market was, getting ready to go down. Mm-hmm. Well, all of that has changed in the last 2 weeks.
Yep.
The VIX is below 19 now. It's at 1870. The 10-year treasury is right back at 3.5%. And the percentage of stocks above their 50-day moving average is moving up.
Yeah.
So all of these things to me are saying, the market wants to go higher. I think the next 6 weeks, we've got a good chance of it heading higher. Just real quick, and I just now thought of this, so bear with me for a second. Mm-hmm. This is a friend of mine who was in the stock. It's called ITCI, Intracellular Therapies. Yeah, therapies. All right, he was one of the stocks we made, and we were talking about this back around here when the stock was right about at its 21-day, this blue line, 21-day moving average. Mm-hmm. And he said, yeah, I put in a covered call and it went up, and I'm fine with that because I made money, but I'm looking for a chance to get in. I said, all right, well, the way I'm looking at it, and forget about this big downtrend right here on the accumulation distribution, because that's a result of a lot of profit taking up here. Mm-hmm. But when we first looked at it, if you take it from right about here, which is when I was talking to him, now look at the accumulation distribution line down there. I said, the chart itself doesn't look that great because it's actually trended down to this point when we were talking about it. I said, but somebody out there knows something.
Somebody knows something.
Look at that accumulation.
Yeah, somebody knows something.
Big traders are accumulating the stock.
Interesting.
So about 3 or 4 days later, they announced a positive FDA trial.
Shocking. Say it ain't so, Dan. Somebody knew early.
Somebody must have known early. And he called me and he said, man, I wish I had listened to you and bought it back, because I didn't. I just watched it go up like that. Yeah. I said, well, and this is the day that it went up. I was talking to him. I said, yeah, I watched it gap up, it went up and came back down. I said, well, usually these kinds of things, they'll come back down to the point of the gap right here. And this is before these big red candles. I said, they usually will come back down to the point of the gap. So watch it and see if that happens. And if it starts back up again, then it might be a good time to get back in.
There you go.
The reason I show this is because this accumulation distribution line is really important. It can really help you understand what's going on under the covers. It's also a good way of determining whether you should hold, if you're a trader or a trend follower, if you should buy a stock just before earnings, or if you should hold a stock through earnings. If accumulation distribution is strong, the month before earnings, because a few weeks before earnings, there's a quiet period and companies can't talk to the analysts, right? Mm-hmm. But the month before they can. So the analysts are talking to that company and they know what their business looks like. And if that's the case, they start accumulating. Mm-hmm. So the accumulation distribution can give you a clue before you get into a stock, especially just before earnings. If you're thinking of buying before earnings or holding through earnings, that can help you make your decision.
Yeah.
Make sense?
Yeah. Thank you.
So the last thing I want to show here is in VectorVest. So I think I showed this last time as well. Last time, so this is called the DPO. This is a detrended price oscillator. The E stands for the envelopes. That's the blue line. That's the range that it usually trades in. And the W is the weighted average. This is the white line. All right. So this gives signals. Let me change this to the do signal. These signals are pretty reliable. So you can see here where it gave us a buy signal. Mm-hmm. Not at the absolute bottom, but right when it was starting up. And then you see where it gave a sell signal, right? So these signals are pretty reliable in VectorVest. It just gave one on Friday.
Interesting.
So it had already broken through this weighted average line. So it needs to accomplish two things for this signal to be generated. It has to get through this white line up here, and the detrended price oscillator has to get above zero.
Got it.
and it's just barely above zero, 0.003.
Yeah, that
All
would be
right,
barely. Yeah.
so barely above zero, but enough to give this buy signal right here.
There you go. Okay.
It's also breaking out of this downtrend line at the same time.
Yep.
All right, so all of those things are very positive. Everything that I'm showing you is basically to reinforce the idea that I think we're going higher for the next 6 weeks,
Okay.
and then we'll see what happens. We'll see what the market wants to do at that point.
Cool.
While we're here, if you want to look at the portfolios for the dividend stocks, dividend players.
Oh,
here's the one that I created. My scan, it's up 2.7%. Here's the blue chip scan, which is the VectorVest scan. It's still down 4.6. And the dividend aristocrats, which is an industry-wide thing, you can Google that, aristocrats. Those are stocks that pay dividends, of paying positive dividends for 25 years and have raised their dividends for 25 years.
Right.
And if they miss even once, they have to wait another 25 years to get back on it.
Wow.
So that one is just barely breaking even.
Okay.
So I said we would track these as we go along. So that's where they stand.
You're very cool. Do me a favor, flash your newsletter one more time, and we will get on.
Yeah, and in the next session, I'm going to talk about PPI and CPI and inflation and where I think that might be headed.
I look forward to it. I have my opinions as well. One more time, flash the newsletter.
Sure. If you're interested, just send me an email to breakpointtrading@gmail.com, and I'll add you to the list.
Thank you so much. Appreciate you.